Hello and welcome back to virtual training on psychological development and investment, brought to you by Everything for Business. This training focuses on developing positive perception or attitude for an investment. Throughout this training, we will deliver lectures throughout videos and we will share important information about investment and how to eliminate fears while investing. This is our fourth video of this training, and if we recap previous video, then we studied about possible positive outcomes for an investment, payback period for an investment, internal rate of return and net present value, and we evaluated different investments. In this fourth video, what you will learn is research process for a better investment. Investment decisions are hard. Without a comprehensive investment research process supporting your financial decisions, even the investments and top performing stock or real estate markets can result in disappointment. Remember, do not put all your eggs in one basket. However, when it comes to investing, you must be careful when selecting which baskets you divide your eggs between. So why research is important? Investment research as an extensive and meticulous process. We consider your needs, analyze different prospects from different angles, and make a calculated assumptions to finally determine whether investing in particular option is right for you. When analyzing a prospect, you don't just look at one aspect. It is important and somewhat foolish to judge anything at face value without considering the context and multiple facts that are intrinsic to its nature. For example, in July 2017, Forbes stated that investing in the entertainment streaming giant Netflix was a great idea. Today, numbers are high, but those who blindly went ahead and invested in those pricey stocks then ended up having a pretty stressful few months, with some even divesting themselves of their stocks at a loss. Investment decisions can be difficult and loaded with risk, but effective and expert investment research and analysis can help you with insight into what to expect from your investment. Were you to wake up tomorrow and decide to invest in Apple? In-depth investment analysis and portfolio management report might actually tell you that while it dominates the market as the world's top ranking company, right now may not the best time to invest in the technological giant. The results would be highlight better options that are available in the market. There are three different approaches for investment research process. One is environmental analysis. You have to do that. There are three steps in investment research. Then you have to allocate your assets, and then you have to select the security in which you are going to invest. From environmental analysis, the capital markets, politics, the economy, and even geographical layout of the land are all essential to understanding and targeting your investment. In this step of investment research, the current situation and factors that influence it are identified and analyzed. The political climate as well as economic trends and development also play a big role in how markets perform. Throughout research, analysis, and comprehensive calculations, accurate predictions can be made about the value of your future investment. For example, let's take an example of Netflix. Netflix has investors conducted an environmental analysis before buying the stocks. They would have realized that despite a positive outlook, there were few things working against Netflix at that time. The company was expanding globally while also introducing a host of original films and series, all produced in-house. The mountain increase and expenditure left Netflix deep in liability. Never a good sign within the market. To combat their increasing costs, the company decided to raise membership fees, raising a public outcry. Alongside, there was also competition emerging in mid 2018. Walt Disney had removed all their films from Netflix after announcing the upcoming launch of their own rival streaming service. Furthermore, the merger of AT&T and Warner Media was soon followed, with the newly formed entertainment giant announcing its own streaming network. For Netflix, this meant having to remove all DC and Marvel productions from its servers. Content that had proven to be widely popular among Netflix subscribers. This development did not stand well with the market, and in late 2018 Netflix stocks fell, performing at least 12% lower than expected. An environmental analysis is essential to presenting potential investors with the larger picture. It helps you take steps towards deciding by giving you insight into what lies beyond the face value of a company or its shares. The second step is asset allocation. The second part of process is referred to as asset allocation. As the name suggests, a series of calculations are used to deliberate where your resources are most likely to perform successfully. The goals and aims out of your investment are considered, and your portfolio is tailored accordingly. For example, if your goals are long-term and you are not worried about the short-term risks involved, alongside exploring a developing economy or real estate, your portfolio manager might also recommend investing in a company whose numbers, combined with other assessments, suggest a bright future. Carefully evaluated investment analysis and portfolio management are key to successful investment. And the final step in research process is called security selection, where specific come into play. Now that you have decided on the best avenues for your investment, you can begin selecting your specific investment options. There are methods of evaluating that help you determine which securities best suit your specific needs and purpose. There are three approaches must be used together to help filter out any unsuited investments. One is macro investing, technical analysis, and third one is fundamental analysis. You can use these three approaches for selection of security in which you are going to invest your money. So, the macro investing, one approach is investing to invest in assets that have a bigger scope. Similar to a hedge fund strategy, macro investor relies on global development rather than just being industry or market specific. Your portfolio manager would primarily look into the global climate and make predictions or assessments such as approaching business cycle and recession in a particular country, a promise for growth in a developing economy. Using this context, you would be encouraged to take actions accordingly. Technical analysis is actually eventual investment decision is primarily based on a market action. The classical supply and demand rule comes into play here, and the top performing prospects are shortlisted. It is then determined how these securities will perform in the long run. Prices and volume data are analyzed and trends established. Results identify the securities that promise good returns in the future, allowing for investment decisions to be made. The third and the last approach is fundamental analysis. Fundamental analysis requires a deep dive into minute details as you research your investment prospect. You investigate the financial stability of the company, its liability to generate income, even bringing the management and operational structure under scrutiny. Hypothetically, your strategy may involve targeting a small startup at this stage. Financial and cash flow statements, as well as balance sheet, past performance, and even public opinion of the company in question are all studied. This analysis also takes into consideration and make predictions based on any strengths and weaknesses within the company, as well as current and emerging competition. When considering stocks, their current prices are analyzed and compared with estimates derived from external research and calculations. These results decide whether a stock is under or overvalued, allowing you to determine which particular opportunity to invest in. Based on the outcome of this analysis, a stock is bought when its prices are below its potential and sold off the momentum it made its true value. Therefore, a fundamental analysis of Netflix stocks around mid to late 2018 would have shown that despite the increasing competition and plummeting stock prices, the company's earning potential is immense and will only grow in future, as evident by its ever-increasing subscriber and widely popular region-tailored original content. So, in our next video, I will tell you the process of diversification usually used for minimizing or reducing the risks that is associated with investment. So thank you so much for watching these tutorials and this training session. And if you are enjoying, please keep on the track and watch other videos. Thank you so much.